All right, we are live. Welcome back to Stock Tricks with Nick for this week's Midweek Movers live stream. Apologies for being a couple minutes late. I got a new audio that I was trying to set up, but unfortunately was not able to do that in time. So back with the headset for now. If you're new to the live stream, typically what I do is I go over a breakout watch list for the second half of the week and then go through stocks that you guys want to see in the audience. I will be going over a short watch list of stocks that have held up the best this week, the last 2 weeks that could be breakout candidates, but I am going to be very, very cautious trading in this next week or so. As you guys can see from the thumbnail and from the title, I'm not going to be quick to buy any dips. I do have a couple positions on, but they're very, very small. And I do have a hedge position that we'll get to in a little bit. But just a quick recap, the market keeps marching lower, especially growth stocks. Definitely calling for a reason for concern, including quality earnings being sold off. We have past market leaders now living under their 50-day simple moving average, which if you follow the stream, you know that I don't like to buy stocks that are under their 50-day moving average. Actually, I won't buy stocks under their 50-day. And we're now getting a lot of the leaders, past leaders that are under their 50-day, which is concerning. And then laggard stocks are now breaking under their bases that they've been kind of building since September or earlier. So all reasons for concern that we'll get into with all of the charts. If you're coming here for a certain stock, timestamps should be in the comment section below after the live stream finishes up. Give me, I don't know, an hour or so to get those for you. Anyway, if you enjoy the content, please leave a like on the channel, subscribe. We're so close to 5,000. If you guys aren't yet subscribed, please do so. It would be awesome to get that by the end of the week. I appreciate all your support as I keep doing this. And then follow me on StockTwits. That's where I post the most often, Twitter and TikTok. All right, quick disclaimer, anything that I talk about is not financial or trading advice. It's all for educational purposes only. A lot of the things that we're going to be talking about is what I'm personally doing, not saying that anyone else should be doing it, but just explaining myself. Trading comes with financial risk. Please do your own due diligence before trading. All right, here are the stocks that I currently own. So full transparency with my channel. When I have big winners, I'll share big winners. If I have, I hope to never have big losers because I always keep my stop losses within 7% from my entry. But if I go on a losing streak, I'm going to show you guys that I'm on a losing streak because that's what when I first started trading, I wish I found that right away. Someone who is open and honest, not just showing how easy trading is, because there are times when trading's extremely easy. From mid-December to mid-February, it seemed like everything we were touching was 20% up, 30% up, 100% up. And then there are times like now where if you didn't have any defensive trading strategies, if you didn't sell into strength, move your stops up to entry, play some defense, this is the tough part of trading. And I think the next couple weeks are going to be tough weeks of trading. So I don't want to sugarcoat it. I am expecting a pretty rough couple weeks of trading, and that's why I'll be trading very small sized, quick to move my stops to my entry, quick to take some partial profits, and not try to have too much exposure in the market. So I have APPS, that's been holding up relatively well. BW, that was green today. INMD, I think that was slightly red, maybe 1% or so, still above my entry. All of those are above my entry price. And then SQQQ was my hedge. I put that on and I kind of built an SQQQ position. That's a triple short against the NASDAQ. Excuse me. I put that on as I was trying a bunch of test positions. If you follow me on StockTwits, you saw a lot of the trades that I was trying to take, got stopped out of a lot of them, but was able to pay that off because the market pulled back. So this week I'm basically flat on the week. Not much is working except for the hedge, and that's why I put that on. All right, so stocks that we're going to be going over today. The watch list items I have here, I also have them written down, so I'm not going to read them off right now. And then I did get a couple stocks requested from StockTwits that we'll cover. But let's jump into the charts. Let's do this. And all right, I did get a new camera as well, so we're going to try this out. I'll probably be looking down on accident a couple times, but for the most part, trying to make contact with you guys. If you have any questions throughout the stream, please leave them in the comments. As we're going through this, I want this one to be more interactive than any of the other live streams because even though I have 12 stocks that we could talk about for a watch list, it's more important that we all understand what trading defensively looks like, why it's time to be cautious, and just not try to get super excited about buying all these stocks that are holding up well, because if the M in the can slim method isn't working for you, the market, it's really hard to make money trading. So sometimes it's the point of trading isn't to make money, it's to see what's working, and then you could start applying some larger position sizes. But let's just go over some of the reasons why I'm being very cautious right now. So the first, as I said on the PowerPoint, was earnings. Really quality earnings are selling off. So the first one that I saw was Pinterest, PINS. So had good earnings, gapped up, and that sold off a little bit. We did get a bounce higher as the market bounced in the middle of February, but since that point, it really hasn't been moving any higher. And this one started off earlier than the market sell-off started, so it was like just a single warning sign that, okay, quality earnings on a market leader. You could see zooming out 200-day, 50, all in the right order. Really strong earnings, and we opened high and sold off the rest of the day. That's cause for slight concern. So that's like one strike against the market, right? That's Pinterest. Even now, this was looking quality, holding up relatively well until yesterday. We had a bearish engulfing candle where the highs and lows are overextended over the previous day's highs and lows, closed under the 20-day. And then today, down 8.4% as we closed under the 50-day moving average for the first time since early January. So this one's been a little bit of a laggard through here, but not too much, and this is slightly concerning. Now, Pinterest is holding up better than some of these, but that earnings sell-off was one strike against the market. Next, we have Upwork. Same story. This was kind of midway through the market being shaky here, pulling back down. They had earnings after hours on the 23rd, and you could see the next day we gapped up 17%. 17% up. Everyone's like, all right, here we go. The stock moved over previous highs. I think let's see. I think the 24th was a bounce day in the market. So we had been pulling back and then we bounced higher that day. So the fact that we opened, we shot up a little bit. So let's see, 18 to 24. So maybe 6% even higher before flushing all the way down. And it closed at the 8-day. But when good news comes with selling, that's when you should be very concerned. So that was Upwork. Since then, we bounced at the 20-day and had two large sell-off bars, but on lighter volume. Now we're in between the 50 and the 20 and kind of this volume shelf in the middle of this. So not much support until, we test the 50-day or get down to about 41.50. So Upwork, another earnings sell-off. And then the big one that just came this week was E-Trade just shut down on me. Let's try this again. The next one that I'm going to be talking about is Zoom. So that was one that that leader had been living under the 50-day moving average for a while now. I remember, let's see here. Zooming out here. Zooming. My last trade with Zoom was on this flag as we pulled back to the 8-day and then we bounced off that. That was my last trade on Zoom. Got stopped out of the last bit on even. And since then, it's bounced, has not claimed the 20-day. And then once it got under the 50-day moving average, that was a no-go for me. And you can see once something starts to live under the 50-day, anytime it bounces, you're going to be seen with get hit with sellers because people are buying the dip right away and then it just keeps dipping. So when it actually does bounce and people can get out for break even, a lot of the times they'll do that. So that's why when you pull back too much, you'll see a lot of selling resistance up top. And I want to be a breakout buyer, not a bounce buyer. Um, Again, I don't know what's going to happen in the stock market. I don't know if anyone knows for sure, but I'm just trying to put as much probability on my side before I take a trade. And setup is buying stock under their 50-day moving average because even if they do get going, you got to be much quicker to sell those into the bounce. With Zoom, so that's why I didn't buy. A lot of people were on Twitter talking about this bounce on heavy volume that was up 21% and then kind of flagged down and came out again with volume. That could have been a buy point at 395 or so through there. Came out on volume, but flushed as the market pulled back. So I don't want to just attribute that to Zoom. But then here comes earnings, crushes earnings. I think it was like 300 times, 300% revenue growth. I don't know that number to be exact, but they crushed it. Everyone was super excited. They were up after hours, up pre-market, and then from the open, just sold off all the way down, sold off 15% from the open on great news. That's concerning. We had follow through selling today. Now we're under the 200-day simple moving average, under the volume shelf. High selling volume on this. Not something that I want to be a part of, and something that shows how weak the market is. All right, so that was the earnings sell-offs. Wanted to also get to base failures. So in some lagging stocks, which you have to consider Amazon kind of a laggard because it peaked out in September during the September like pullback here. So September 2nd peaked at 35.52, and since then has traded sideways and down for September, October, November, December, January, February, March. While the stock market has made higher highs, higher highs, higher highs, growth stocks are breaking out and holding all the way through, at least from mid-December to February. That's when all the growth stocks were going nuts and everything we touched was up 20%. And this was not moving. So not a name that I would want to be trading because I'm always trying to keep my money in the strongest stocks. And at the time, Amazon wasn't acting strong, so didn't have any money in it. And now we're starting to see a pullback under the 50, bounced at the 200-day, a little bit higher, and then today continued that sell-off under the 200-day, under the meat of this volume shelf. And now let's see, what are we? We're 4.5% away from breaking through the bottom of this very long base. So that's Amazon, very concerning there. TTD, that was the one that was just a clear pullback, built a little bit of a base here, pulled back to the 20-day, had earnings, looked fine through that, and then the next day after earnings, so kind of a combination here, sold off after that, sharply sold off. So let's see, pulled back 17% in just 4 trading days here, bounced like everything else in the market bounced, but when buy the dip was trending on Twitter during the first pullback, I was like, we have not seen enough pain. No one's nervous about this pullback. Typically, the market wants to hurt as many people as it can. So when that was happening, I was like, nope, not chasing this bounce. If buy the dip is trending on Twitter, I don't think we've seen enough pain. And we obviously did not, because yesterday and today, large sell-offs. Today down 13% and just undercut the lows in this base. So now likely to test this gap fill from a previous earnings. There's another gap even lower in the chart by the 200-day moving average. Not much volume through this range at all. And this was something, if we zoom out, this was a really strong leader up until 2021, basically. So another concerning stock. And then we got Tesla and NIO. Tesla was kind of basing out here, had earnings, sold off a little bit, but came right back up. So I was looking actually to buy this if we could break over the high from February 2nd at 880. I actually had an alert on to try and buy that. We got really close, hit 877.77, but never cleared that buy point. Since then, we had this large volume sell-off day, which got the sell-off started, and since then, it's just lived under its 8-day exponential moving average, dropped under the 50-day, had a 2-day bounce, but still never got back over that 8-day, and has just struggled all the way through, closed at the low of the day today, down 4.8%. Now it is hitting the volume shelf from a previous base, mini base, I guess, through here. So we could see a bounce at these prices, but below the 50-day moving average, if we see a bounce, anyone who bought the dip in here is going to be excited to get out for break even because they weren't managing the trade right there. So Tesla was the true leader in the market. That really drove all the growth stocks, and the fact that that's well under the 50-day now. Let's see, what is it under? 16% under the 50-day moving average, and the 50-day itself is starting to turn down in a couple days or so. So when Tesla goes, the market goes. As Tesla went up, the market went up, and now we're seeing the reverse of that. NIO, similar. I actually bought NIO through here. So on this, either this day or this day, one of these green bars. And then I got stopped at even because I was trying to trade so quick, move my stops to even because everything in the market was extended. And from there, just lower lows, kind of a sideways day, but then just continued lower lows, bounce on earnings, and then just more aggressive sell-off. And now we're at the bottom of the previous kind of base here. And if we don't bounce in the next 7% or so, I mean, NIO could be in some trouble because there's very little volume until the previous base through here around $30. So again, I'm not trying to buy a pullback because the first couple pullbacks, the first couple bounces are likely to hit those selling resistance, and I want a clean path for my trades. All right, so that was the doom and gloom of the market. That's why I'm being so cautious. But I want to kind of flip this and go trading psychology for a second before we get to the watch list. One thing that all new traders struggle with, and I know myself I struggled with when I first started, was when I do use a stop loss, and now I always do, but when I did in the past, and that stop loss would get hit just before a stock breaks out, I would always be feeling like so bad about myself, like, oh, why did I have that stop there? If I just bought the dip, or if I just let the stock move as it should, I wouldn't have been stopped out. I would have held on to that winner. And that works for a long time. But when it doesn't work and you don't have a stop loss and you don't have the emotional intelligence, the EQ to just get out of the trade. Wanted to cover a couple stocks that I was in, listen to my stops, and you need to kind of pat yourself. You need to kind of pat yourself on the back when you do use risk management with stop losses, and you get stopped out, because when the market does turn around and you take those small stops right before a stock breaks out, you're going to feel bad about yourself. But you have to bring yourself back to kind of this point, or 3 weeks ago, when listening to your stops would have saved you. Sorry about that. Would have saved you a lot of money. So I posted this on Twitter, but Let's see. Sorry about this. All right. These are a couple trades of mine that went south, and I got out for either break even or slight losses. So BLNK, this one I bought on the turn here as we bounced, had a nice undercut of all the previous lows, then bounced over the previous day's high, got out maybe 25%, 20%, and then came all the way back in, and I sold some into strength, got stopped out of the rest at even, and a lot of people said, oh, it's just pulling back to the 20-day. You can add at the 20-day because stocks always go up. If you would have added to a losing position, you would have, whatever, doubled your size onto a stock that pulled back 38% from your initial stop, from your entry point. So now, not only if you add to a loser, not only do you take that 38% loss instead of just cutting your trade, but now you have double the size on the trade. So that's why I never, ever add to a losing position. It works sometimes when the market's in an uptrend, when the market keeps bouncing higher. But it's times like this where the stock just continues to plummet, down 38%, and now you have a double size position on it because you're too stubborn to take the stock off for break even. Not good. FCEL similar. I mean, from the peak here, down 46%. Somewhere you have to move your stop up to a previous day's low, to the 8-day, to the 20-day, to your break even, whatever it is. But just running through a lot of these names, these are all the growth stocks that made us a ton of money throughout 2020 and early part of 2021. Palantir's down 50% from its high. Lemonade down 45% from its high. Plug. This is one that I actually got in on this green candle, got out a little bit, and then got stopped out for like a 3% loss. That would have pulled back 43% to the low, and now it has bounced a little bit, but 32% still. I take 5% stops or 7% at most on any of my trades. 33%, that just destroys your account. Destroys your confidence, and just shows that you don't have strict risk management. And there was plenty of time where strict risk management didn't matter. But when we get these strong pullbacks, you can give away all the money that you made by adding to your dips, adding to the 20-day moving average if you're not careful. And that's something that I tried to say on StockTwits, on Twitter all the time. But it's tough to say in the moment because, I mean, everyone's making money. You see on TikTok, like, everyone's saying, like, all these stocks are going to blow up, but no one's talking about risk management. So that is why I made my channel, and why I'm trying to stress that here. All right, let's see. Any questions? How quickly do you get back? I'll put on, I got a question in the chat. How quickly do you get back into a stock after a stop loss? So if say the market's in a normal, like, slight uptrend, and I'm close to my account balance high, in that environment, I'll put on a stock right away. I'll put on the same stock right away if I get stopped out, if the stock moves back above my buy point. I don't have any ill feelings towards the stock. It might have just been I bought it at the wrong time. But in an environment like this where I'm putting a bunch of test buys out and the market's telling me, hey, these test buys you're putting out are not working, you're getting stopped at a lot of them. Every time that happens, I go from, say, a 10% position size, that's my typical when the market's working, 10% of my portfolio on a trade, to then I'll bring it down to like 7% on the next test buy, and then 5% if that doesn't work, and 3%, 2%. And now it's, yeah, now the trades that I'm putting on are about 2% of my original position, or of my portfolio. So just keep on scaling down. So as I'm either trading at my worst or the market's at its worst, I'm trading with the smallest size. I'm not trying to play hero ball when the market's obviously in a downtrend. I want to be playing hero ball when every stock we're touching is up 20%, 30% in a week, like we got from mid December to mid February. That was the time to press. Now's the time to take a step back, understand where the market's at, maybe do some research of like through your own past trades, see what you did well, see what you didn't do well at, and not feel inclined to do too much in this market. All right, let's see. Nick, you are kind of dumb. Yeah, we're all kind of dumb. All right, so let's jump to some stocks that I want to cover. ALDX, this has been holding up relatively well. Today it did pull back a little bit, down 4%, but still right around that 20-day moving average, right around the 8-day exponential moving average, and in the meat, kind of a little bit below the main part of this volume shelf here. But a name that hasn't quite gotten destroyed yet, up 128% on the breakout, and then we pulled back, let's see here, 27%, so not quite a high tide flag, but still a strong pattern to trade in a good market. The fact that this is holding up well while the market's really pulling back is a good sign. Very low volume as this pulls back and trades sideways. ATR is starting to come in. Relative strength is moving up, even though this is pulling back. So with this, I'm only buying if we break out over Monday's high. That would be 1283 right through here. And I'm going to be using the terminology like by buy point, but for all of these, most if not all of these, I'm just going to be watching these because I want to see a couple quality setups break out with good volume and hold that breakout, not get sold off by people trying to soften up their P&L before I start getting back into the market. So it's a great time not to trade, great time to take notes. All right, that was ALDX, AOSL. Come on. Sorry about that. All right, here we go. So has been in a strong uptrend. We got the 200-day, the 50-day, the 20, and the 8 all in the right order, which is very rare for the market right now. Has pulled back what has not. Pulled back 23% from the highs, but is starting to tighten up here. ATR actually starting to come in a little bit. Average true range that measures the daily candles. As a breakout trader, you want to wait till the stock pulls back, till price tightens up, and you get that the disagreement on price less and less and less. And then you could take a trade with a tighter stop loss, and then you only have to be right on much fewer of your trades to be profitable. Because if you're wrong 3%, 3%, 3%, but you get a 30% winner, that pays for 10 of your losses. So ATR is something that I'll watch for because it typically shows that people are done disagreeing on the price as it comes in. And then when a big buyer steps in, that's when you'll move the price up rapidly. So we have 3 daily highs right around the same price, 38.27, 38.20, and 38.14. So if I was to buy it, I'd be looking at 38.27 as a possible buy point. One strike against this is the higher volume selling bars. Ideally, we get a couple days where that flips and more buyers are stepping in, and we get a green day on higher volume. AVNW. This is holding up really well. It's above its 8-day exponential moving average. Hold on, 65.44. Yeah, above the 8-day. This is showing after hours as well. But you do see that nice pivot with yesterday's high as a possible buy point there. Good shakeout today under the previous day's low, under the 8-day. Didn't quite test the 20-day moving average, but holding up extremely, extremely well. AVNW. Got BILI, another one that bounced at the 50-day and is just between the 8-day and the 20-day, which unfortunately are in the wrong order. You would rather have 250, 28, but you're not going to get that when the market's pulling back as strong as it is. Another one that had kind of an earnings sell-off after it gapped up, but has held relatively steady. I will be looking for a high of 147.71, the high from February 25th, as a possible buy point there. The long upper wicks are showing me that sellers are stepping in right around these prices. So I don't want to get in until we get over that price and those sellers step away. Higher probability of your trade once you buy after that point. BWMX. Yeah, this one's very thinly traded name. Only 53,000 shares traded today, but ATR coming in, bounced at the 20-day moving average today at the low, holding up relatively well from all-time high. Had a nice flush here, 17%. What day was that? On the 23rd. So not one to put a ton of position size behind because it's so thinly traded, but one that's holding up okay. Next, we got CMRX. This is showing after hours too, so 991. Let's see, 1028. So that's where we closed today. We closed above the 8-day, closed above the 20-day, and we have the right order. So that's rare in this market. Good relative strength on this name. What I would be looking for is just a break over the high 1091 from February 25th. CMRX. EP. Let's see. Oh, man. Terrible, terrible service right now. While I'm loading that back up, exciting news that I've announced on Twitter and StockTwits, but starting next week, I'm doing a series where I teach 3 of my friends that have never, ever traded before how to trade from step 1. We're going to be using Weeble's paper trading account, and I'm going to teach them about candle charts in the first episode, and then each week I'll let them trade, and they'll send me the trades that they made. We'll break down a couple of their mistakes, a couple of the things that they did well, and then each week we're going to build upon a rule book, trading rule book, such as don't buy stocks under the 50-day moving average, always have a stop loss at least 7 or at most 7% from your entry. Kind of the basic things that new traders probably have heard but haven't really put into a concrete rule book. So if you're a new trader or someone who has struggled the last couple weeks and just want to refresh yourself on Trading 101 series, that will be coming out. We're going to film the first episode on Sunday, and then the first intro episode should be out next Wednesday or Thursday. So really excited about that because I love to teach people how to trade, and starting with people who have never traded before is going to be really, really great. Where was I? GPI. All right, GPI. We got the 200. Oh, got the 250.28 all in the right order. Closed at the low of the day today with a high upper wick. That's concerning. Lower volume on the green day. Another one concerning. But it's holding up well. So we're being pretty loose with our requirements for the watch list, but that's why I'm not calling this a breakout watch list or stocks that I'm going to be buying. This is truly just a watch list for me of some quality names that are holding up that could be impossible buy points, but I want to see some of these actually break out and hold, break out on heavy volume and hold before I get back in the market. MARA, this is one that's all over the place. ATR is very high, but is holding up relatively well compared to the rest of the growth stocks, and does have a possible buy point at $40 clean, a break over that. I know this is connected to Bitcoin, which is holding up well. So RFP, this is one that I almost took today. And I've traded it in the past, but I don't feel like trading too much in this environment, and that's completely fine. But let's see, did we break over this high? 983, 990, 987. So we did break over the highs in this pivot, and it got sold off today. So that's another concerning part. Probably looking for a break over 10 then as a possible entry point. But this has been a really nice uptrend all of 2020 and into 2021. We pulled down 20% from the highs and then had this flush underneath the previous lows, clearing out the stops. And then it's traded sideways, which you can see the relative strength compared to the Qs is picking up just because it's trading sideways. So when the market does bounce back, usually the ones that have the strongest relative strength are the ones that continue higher. So this one, break over 990, break over 10, possible entry there, but still have to be quick with your risk management, quick with your stops. Oh my gosh. All right, let's see. What are some of your questions? We'll pause there because E-Trade is just continuing to shut down. I should probably not do that. All right, let's see. So I don't trade based on job numbers or any of that. There's so much noise in the market that I basically just listen to volume and price of the stocks, try to see how the leaders are holding up, all the job numbers, all of that. Like, I'm sure there's a way to trade profitably off that news. That's not what I do best. So whatever you do best as a trader is what you should stick to. All right, let's try this one more time. If this crashes again, we're just gonna call it a live stream. And all right, let's get to some of your guys' stocks. Yeah, Rocket went crazy yesterday, and just another example of like the first couple stocks that are going to break out because everyone has taken such large losses. Well, not everyone, because institutions have taken such large losses by holding on to these growth stocks that have pulled back like 40%, 45%, like we just covered earlier. The first couple of names that are breaking out on heavy volume are probably going to be sold off just to soften up their accounts profit and loss for the quarter. Basically, we have one month left in the quarter, so this is one that one of the traders from the new series was on me about. He's like, we should buy RKT, and I mean, in hindsight, this would have worked, right? Like, you sell some into strength, move your stop to entry, but just because one is working, we got to be careful because I'm a swing trader. I'm not marrying these stocks. I'm dating them. So something like this, that's concerning. Who knows where this goes from here? I sure don't. DraftKings was holding up really well, but this kind of action today, I mean, it's still above the 8-day, which is above the 20, 50, and 200, so it's all in the right order. But this kind of candle where we got out and then people just took profit, because, again, this is one of the few names that was actually working. So they got to sell that off to take some profit to offset the loss. Yeah, guys, I'm sorry. E-Trade is just continuing to shut down on me. So I'm just going to call that a live stream. Trading recap up on Friday, and we'll use stockcharts.com for that, so won't run into any of the issue. Give me a follow on StockTwits, Twitter, and TikTok. It's Stock Tricks with Nick on StockTwits and TikTok. Stock Trick Nick, no with on Twitter. And subscribe to the channel if you enjoyed this content. I know it wasn't a super happy live stream. I would love to be showing you guys, here are 10 stocks that are going to break out in the next week, but I don't want to do that. I want to be a credible source for you guys, and I'm gonna ruin my credibility if I'm saying, oh, you got to double down, got to buy everything right now, when I'm not doing it myself. I have 3%, 5% on the long side right now, so I'm trading very cautiously. I don't want to push anyone else to be buying like crazy here. Once the market's good, I'll be putting out breakout watch lists, and the subscribers and likes and all that stuff will come. But as always, I'm fully transparent with you guys, and want to do what's best for all of us as traders. So not going to be hyping up stocks when I don't believe that the market's ready to press myself. All right, see you guys Friday for the trading recap.